Hello there, Maverick traders. This is Rob Reinhold again. This is now the second day that you've had to listen to me pontificate about the markets. And guess what? I'm going to be with you tomorrow for the trading room as well. In this session, we're going to talk about the day, what happened today. Today was a big, huge reversal day, large bearish engulfing candle. The question is, did it change anything? It was a nasty day, but did it really change anything, technically speaking? And of course, I've always got setups for you today. I've got two bulls, one bear. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
I mentioned earlier that today was a big down day. And the big question is, why? Well, you know what? Sometimes there aren't real good reasons why. The news always comes up with a reason why. Sometimes the markets were just ready to sell off. And if you listen to my end of day video last night, I said, hey, if it's a big gap up, we likely get a fade from that. And that's exactly what happened. So we got the gap up from NVIDIA's great earnings. And look, it was crazy because NVIDIA was bulletproof all day long. Look at the stock chart. The entire time the market's tanking, NVIDIA is literally making new highs while the rest of the market is just going to hell around it. Eventually, it did pull back a bit at the end, but look, still up 9.3% for the day. This was a very typical sell on the news day. We get that at the end of runs. When you have a big run into something and a big anticipation and the news finally comes out that everyone was looking forward to, the NVIDIA earnings, then the profit taking comes in. One other thing that did happen today is bond yields started to go up again. Not substantially, but enough to where the market didn't like it, and it came off of some strong manufacturing numbers. So look, the question is, did it change anything? It was a nasty day. I mean, look at the returns. Dow down 1.5%, S&P down 0.74. Remember, these were all up in the morning. So the S&P opened up about 0.75% and closed down 0.75%. That's a 1.5% drop. The Nasdaq opened up over 1%, closed down 0.39. The Russell opened up about 0.5% and just got killed all day long. Oil down, gold got killed. That's a big move down for oil. And look, if you take a look at the advanced decline line, this is an ugly, ugly number, 80%. That's a pretty rare day. Every now and then we'll get a 90% down day, but this was pretty close to one of those really, really ugly days. And you can see that the market is not overly bullish. It's not really having the broad participation that we typically like to see in these markets here. So let's take a look at a chart. And this is where I always like to step back. Today was intense. Today was super intense, and it felt like the end of the world. It felt nasty. Let's step back. Let's step back and really take a look at what happened here. I actually said that we could pull all the way back to 5260 on the S&P and still be just fine. Still be just fine. That's our previous breakout point. All right. As you can see here, we got a little bit of a candle at the end of the day, not enough to really get excited about. So here we are at 5260. One of two things are going to happen. It's either going to hold 5260 and we could have an up day and it's going to kind of save the day. And look, it's not great. We're still off of the all-time highs, but look, a positive day tomorrow is a sign that that was a one-day sell-off. A negative day tomorrow with the close on the low is going to be a pretty clear sign that we're going to go test that 50-day moving average. So for me, it's just a matter of what's going to happen tomorrow. If we stabilize, which I actually think is the more likely scenario, this wasn't any bad news. This wasn't anything other than just pure profit taking. I think we're going to stabilize tomorrow, but I have no idea. I'm going to have to wait and see. If it does stabilize, then it's kind of telling me, hey, you can limp back in with some more bullish trades because support held. If we break down, it's telling me, hey, you know what? It's not ready to add in some bullish trades yet. We got to find where the next level of support is. If we take a look at the NASDAQ, the NASDAQ looks great. I mean, frankly, this looks fine. I mean, you even take a look at this lower little trend line that it's been doing over the last couple of days. It came down to the lower trend line, pierced it a little bit, and then bounced back up. The NASDAQ still looks technically in a very good spot. I'm going to say this again. This was an intense day. It was a big, fat, red day, nasty. But when you take a step back, did anything change? And the answer is no. We're still at a +3. We're still at a +3. Until that changes, we have to treat this as a market that wants to keep going up. We know that in bull markets, there's pullbacks, there's bases. We know all that. At this moment, this is all that this move is a pullback or a base. That's it. It might turn into something more, but at this point, we can't speculate what it's going to be. Now, look, we can speculate, but that's where your opinion gets involved, and that's where all our feelings get involved. We're going to look just at the charts themselves. So at this point, +3 market. So let's go look at a few trades. Now, I shared with you a watch list, and this is pretty much the same watch list as I shared with you yesterday. But I went through the watch list and said, okay, which one of these stocks held up? So I left in all the stocks that I thought held in really well over the last 24 hours, and I got rid of some of the ones that really got crushed and fell apart. But when you take a look at what is a bullish one, there's a few that I still like. The first one I want to take a look at is Vertiv Holdings. All right, so today you saw the stock gapped up, ready to break out to a new high, and we had a red candle. Okay, had a red candle. Here's why I like this one. It still had a positive day today. Remember, the rest of the market closed well below yesterday's candle. This one, hey, it still closed positive for the day. This is where I love to pull out like a diagonal call spread and something like if we get a little gap down tomorrow to 100, I would love to do like the 95-100 diagonal call spread. I think that would be a really, really simple trade. If you want to be verticalized, I think you got to do the 100-105 is going to be the trade you need to do. As you can see, you're not really asking for this to do all that much. If the whole market gets crushed and killed, this thing probably does go down some more. But if the market holds up, the things that held up the best during the downtrend are going to likely do the best to the upside. So I like this VRT quite a bit on the long side. In the healthcare sector, this is Teva Pharmaceuticals. You can see we've got a nice high base forming here. Nice high base. And we're still up at the upper part of the base. Today's candle was a nasty candle, and this one held in really, really well. I think you can do the same thing here. I think a diagonal call spread, a 15-17 diagonal call spread makes a whole lot of sense. If you want to be verticalized, then I think something like a 16-17. That's going to get you, you'll probably be about 60, 65 delta on this one. So this is going to be more of a theta play than a delta play. As you can see, I'm not looking to ask anything to break out and run to the upside. If we have a positive candle tomorrow, I'll look at that next week. But as far as the trades I'm looking to enter tomorrow, they're going to be a little wimpier than they would be had I had a really nice clear candle to the upside. Let's talk about the short, Zscaler. Zscaler is a stock that has not done well. Even when the market was going higher, this thing was going lower, and you can see we're low basing. And it looks like it wants to break below the low of the base. If the market holds up, it probably doesn't break below the bottom of the base. But we probably go down and trade down to 168. This is where I really like something like a 170, 175 bear put spread. It's going to be, again, a mostly theta play with a little bit of delta. So again, you just need it to run out of time. I'm looking to make this one just 1 week out to May 31st. If it is a down day tomorrow, I think you can get a little bit more aggressive. So let's say you wait to see what the candle is tomorrow, and an hour or two before the end of the day, it's pretty clear that it's going to be another red candle. I think you can get more aggressive on this one and go for something like the 170, 165, where this is probably going to be more around 0.3 delta. So you're going to get a 3-to-1 risk-reward ratio or 2-to-1 risk-reward ratio on this and make it a little bit more directional. So a red candle tomorrow, I'm willing to get a little bit more aggressively bearish on things. A green candle tomorrow, I still want to be doing what we call our chicken bulls and chicken bears. I think that's where you want to be on the bear side. Let's talk about tomorrow. The markets are at support. Now again, the NASDAQ is not. NASDAQ is looking great, but the S&P is at its support line. Green candle tells me probably a one-day sell-off, and you can get back on the bull side for the next run higher. A red candle means we're likely going down to test that 50-day moving average, meaning we probably have a little bit more downside next week. Ultimately, this is still just a pullback. Even if we pull back to the 50-day moving average, I'm going to say the same thing. You can't get overly bearish here. You have to wait for it to clearly break. And if it doesn't do that, then we're going to get back on the bullish side and ride up the next run. Tomorrow, durable goods orders, consumer sentiment. I don't think the market's really going to care about that, and really no earnings to talk about. That is the Market Roundup. Thanks for joining me. Take care. Goodbye, everyone.